But let's talk about Mpact, which was spun off, as I said earlier, from Mondi and listed in 2011. It manufactures packaging products with a particular focus on the corrugated paper that you've been chatting about repeatedly. Market cap 4.6 billion rand, price to earnings ratio 14.9, dividend yield of 2.9%.
So since it came out, it did super well, and everybody said, wow, look how well they're doing even in a difficult market. Bruce Strong and his colleagues running out of Melrose Arch, just excellent operationally. However, it cracked. And that point where it was priced for perfection and ongoing growth, it's not a happy place to be when the market sort of decides that you've now started to let us down. Share chart will reveal in the last 18 months it's looking a bit sad.
And that's simply because it was priced for perfection, borrowing from what Paul was saying earlier. Andrew?
Yeah, you can see what happens then, early, I suppose, to mid-2016, when you priced at these lofty levels, and that did fantastically well. Remembering that this was Mondi's South African packaging business, we can think of, other companies that have been spun out of, a mining company springs to mind that became a South African business and did superbly well, and then all of a sudden fell out of favor. And you see what happens when they disappoint and you price for perfection.
The market has no mercy.
Yeah, recorrects incredibly quickly, which we saw there. But again, I still think this is a good business.
This is really because it was priced for perfection rather than anything fundamentally wrong with the business.
And the environment's tough, so they did incredibly well, but now there's a lot of competition coming in trying to eat their lunch. I think that's a really good example of it. You see it here. They were incredibly profitable, and now this competition has stepped up. So that's hurt them. They've been spending a lot of money on their plants, so they're going through this capex cycle, which should put them in good stead, through 2018, 2019, but it's hurt their earnings right now, and then it's the consumer story again. So it's almost like a perfect storm that's really hurt them over the past year.
Is it hot at current levels?
I would sit on the sidelines right now and say not hot. Purely, I'd just rather wait and take a wait and see approach.
And also because there are better opportunities potentially in this sector.
Exactly.
Hot, not?
I think we can wait again here because the mood out there is sort of very tentative.
Somber.
And it's because we're in a political cycle as well as a soft economic cycle. So people are really deferring and delaying capital spending. Companies are pulling back all over the show. Individual purchases are not great. And I don't think that changes until such time as we get this upsurge in enthusiasm once we get some clarity in December.